Hey guys, welcome back. You're still tuned into Business Lunch. Now we're picking up that market regulator SEBI's board meet today. We'll discuss buyback regulations, government's regulations as well for market infrastructure institutions. So Yash is here with all of the details on what we could see at the board meet today. Yash.
Well, that's correct, Pavitra. So, of course, it's a very crucial board meeting from market regulator SEBI today. And what makes it crucial is the possible amendments which may come for the buyback regulations in the country. Do remember very recently, there was a consultation paper which was floated by market regulator SEBI which suggested various amendments to the current buyback regulations. One big takeaway out of that consultation paper was that the intention to actually phase out tender route buyback to open market buyback and only have tender route buyback starting April 2025. But still there were a lot of suggestions which came for open market buyback as well as tender route buyback. I'll take you through some of the important ones. As far as amendments with respect to open market buyback is concerned, market regulator SEBI had proposed that the maximum limit for such buybacks should be 10% starting April 2023 and 5% from April 2024. Do remember that the current limit right now is 15% of paid up capital and free cash flows of the company. The time period essentially from the start till the end of the buyback was proposed to be cut to 66 days from April 2023 and 22 days from April 2024. The current limit as far as the time period is concerned is 6 months. Also, one important suggestion was to shift tax incidence fully to shareholders from the company in case of buyback. There were amendments with respect to the open market buyback which also came in terms of eligibility, in terms of which companies can opt for this route, restrictions on volume and price of the companies wanting to opt for such a buyback. Now, as far as tender route is concerned, something which market regulator wants to encourage more, the SEBI had recommended that net debt-free companies can announce up to 2 buybacks in any financial year. The gap between 2 buybacks was reduced to 6 months. This is currently 1 year. Also, what they had said is that the maximum limit of tender route buybacks could be 40% of the paid up capital and free reserves, which currently is 25%. So that's the large chunk of the board meeting today on the buyback regulations. But apart from that, 2 more points. SEBI board will also discuss regulations around disclosure of material events and information, and also finally it will discuss the governance structure for market infrastructure institutions like exchanges and depositories.
All right, Yash, thanks a lot for getting us all of the details on what we could see at the SEBI board meet later today. Of course, we'll get back to you once that meet does conclude for everything that comes out. But with that, let's move on and talk about an electronic systems design and manufacturing company, that is Elin Electronics' 475 crore IPO opened today for subscription. Now, earlier we spoke with Akash Sethia, who's the head of strategy at the company, to discuss their business outlook from here. Let's hear him out.
Just in terms of our EBITDA margins, we've historically always been in a 7.5%, 8% kind of band, which are industry-leading margins. Going forward, we don't expect a material capex to come in. As things stand today, our asset turns are probably closer to 4x on a gross basis. Which, in some sense, the business is at an inflection point where, capex has been done. Because of the backward integrated nature of our operations for the product segments that we operate in, we typically end up being the lowest cost manufacturers because as opposed to a mere assembly player, we end up producing most of the components and the sub-assemblies required in-house ourselves. So therefore, we end up, being one of the lowest cost players. I am unable to give you a specific time, but in general, we expect to do that over the course of the next 2 to 3 years.
All right, that is the word coming in from Elin Electronics. But with that, we have to get into another short break on the show now. On the other side, the European Union nations agree on gas price caps to combat the energy crisis that's playing out in the region. We'll tell you more on that after this short break.